We keep talking, we've been recently showing the bank stocks, which have been on the rise. Part of that has to do with what you were talking about, I think, which is the prospect of what you think the Fed may or may not do. My question is, when do you think the Fed is actually going to move, if they're going to move at all?
I don't know that answer. No one does. However, what I would say is we do think that there'll be more demand on a going forward basis in terms of this economy. And I think because of that, you may see more inflation sooner than what the Fed has stated in terms of this 2-year period where they would be keeping interest rates low. We're anticipating some kind of consumption boom. People have been locked up for so long. The savings rate for the typical American is higher than it has been. So there is money there, despite, again, the unevenness in terms of where there is true devastation in this economy in terms of lower income individuals. But this consumption boom could lead to, again, more inflation than we anticipate, prices going up, pricing power being there, and ultimately the Fed needing to move.
I'm curious, and I don't know if you asked that you put this great group of luminaries together, what everybody thinks of Bitcoin. We've been talking about it virtually every morning now for the past month and a half, just because it's been remarkable, like Tesla in that way. We're now over 40,000 this morning.
So the one Bitcoin holder was Bill Miller, and he was the one who said that, he believes it is a state-of-the-art breakthrough in terms of just the system itself, and thinks that it is, it has legs. And he was the one who was most bullish on Bitcoin. The others had no opinion. I probably would be less excited about it, but, that's what makes for different portfolios.
What was the biggest surprise that came out of that conversation yesterday?
The biggest surprise for me was there was a lot of agreement around a couple of points. One, that more stimulus will be needed. And this is people with different political persuasions, et cetera. But they all suggested it needed to be more targeted, that the sort of broad-based stimulus will not work. And it really needs to go to the areas, the industries, the individuals, the parts of the geography in this country that really need it. And I thought that was a really good point. They were also indifferent to what Republican or Democrats hold Congress, the House, et cetera. I thought that was interesting. We all said we would have thought the market would have reacted to the Democrats taking the Senate. And yet there was a lot of indifference there, even amongst the managers. That surprised me. That I would have expected the market would have preferred a Republican Senate and a Democratic House. But they said that they didn't think that really was going to matter long term. And maybe that's back to, Warren Buffett has that very famous statement, markets are stronger than governments.
Shepard Smith here. Thanks for watching CNBC on YouTube.